We have Hydreight Technologies.
Thank you. Thanks, everyone. It's not easy to stay full day in presentation, so being here in the last presentation is much appreciated. So we'll talk about Hydreight. Some of you may know already about our story or following us, so we're just gonna go a few steps back and start from scratch. Hydreight, in one glance, it's a company that is focusing on the US healthcare. The pain point that we saw it since 2019. It's a very fragmented and broken system. The idea was to create the very first and the largest mobile clinical network. A network that has nurses, has doctors, has pharmacists, and the most compliant way for the patient to have access to them all. The company organically, without any further raises or borrowing any money, went from about $1 million revenue in 2020 to over $22 million revenue last year, made the company be profitable, 30–40% year-over-year growth by focusing on the operation and the growth. We created a business by 15–16 people, very scalable based on the processes that can grow to any scales. We become the cash flow positive late last year and this year, so profitable. This year we had a live offering, and also we did convertible with Beacon and Canaccord, which we'll talk about it. Very strong cash balance, about $17–18 million in the bank, and 57% ownership. The business that we created is not one single company in the United States that can offer what we're offering. We're not interested in directly marketing to the consumers because the customer acquisition cost is high. We are a B2B2C that we enable businesses to be able to make money. We've been called as a Shopify for healthcare by Financial Times when we were ranked 13th fastest growing company last year. We created a system from legal structure to a technology, a 50-state medical company that anybody can use to be able to serve their patients without being worried about anything. We cover from the medical direction to a doctor network to a pharmacy to a legal structure. We deal with 3 different verticals. The first vertical that we started at the very first was a nurse network, been named as Uber for nurses. In 30 of the 50 states in the United States, it's illegal for nurses to work outside of the brick and mortar unless they have a medical director, work under a medical company, have access to a doctor network to see the patients before every visit, and have access to a pharmacy. We went and created them all with the underlayer technology that will define the flow of the service both for patients and for healthcare professionals. Since 2019, we brought on board over 3,000 nurses. Not only we don't pay them, they have to pay us $3,000 per year to be part of this network. They are mandated to order to our pharmacy network, and our margin is 20–30%, and we'll take 10% of every service being delivered. That network is growing fast on the monthly basis, anywhere between 60 to 120 nurses coming on board with us, and we continue growing that market. When we're working on that market, during the COVID, we realized that the medical spa industry is growing really fast in the United States. Every corner, there was an IV drip bar, a med spa to do semaglutide, TRT, NAD. They all opened when the rules and regulation were relaxed because of the COVID. The COVID was done, FDA started going after them all. They either had to close the door or they had to find a turnkey solution to be able to address every single needs they have. So we started tweaking our technology and the structure so we can white label our solution to large franchises. We signed multiple different franchises that they sold over 1,000 locations. They came on board to use our structure, our doctor network, our technology, but our mandate was all the pharmaceutical has to go through us. And the margin was 20–30%. So basically we create a medical company and SaaS company that we let people to use our system if they put the order of the pharmacy through us. Any SaaS company has connected their services to an additional service that is tied to their customers' growth. A lot of them do that with payment processing. We're doing that with the pharmacy. The first two verticals took us from about $1 million revenue to over $22 million revenue from 2020 to end of last year. End of last year, we introduced our third vertical, the vertical that is gonna double, if not triple, our revenue this year. That was the VSDH1 direct to consumer. Some of you might have heard about Flex, Hims and Her, all the direct to consumer selling from hair loss product to semaglutide to ED product. Those are the ones doing it properly. However, there are thousands and thousands of the website and business in the United States who's selling it that either they're not compliant or they can only sell in one state or one product, and many that they have members and they cannot sell any of those treatments. We created a system that if anybody wants to start selling any of those products in full compliancy, they pay for a license, we give them a widget. They put the widget on their website. The moment that the lead converts into the patients on their website without even patient noticing that, our system will take over that. They fill out a questionnaire. Based on the questionnaire, our system will connect their patients to a doctor within 15 minutes live. Doctor will put the prescription, goes to our pharmacy. The patient will receive the personalized medication. And then reassessment and follow-up will be booked automatically. Our customer will get paid, we get our margin, and their patient gets served. We launched that end of last year, Q4 last year. Right off the bat, we got a few hundred licenses sold with a very strong waiting list. We've been focusing on that to bring the orders. The goal that we started this year was for us to have 1.3 million orders only on our third vertical. The first two vertical, we're expecting to get roughly about 25 to 27% growth this year. And that's not based on just the future forecast. It's based on the historical data, which we are on track with 33% in the first two quarters, with the first two vertical. That by itself is gonna get our business to 27 million top line revenue. The third vertical, we're looking at 1.3 million orders. Because of the onboarding time, from the licenses that we sold is usually 18 weeks onboarding for those businesses. Some of them, they already have existing orders. The orders started in month of June. We have roughly about over 7,000 orders in month of June. In our own internal matrix, we're expecting roughly about 200,000 to 230,000 in Q3 that we finished with over 295,000 orders in our third vertical. Our goal with value per product order is by end of the year to get about $40, and then it's gonna go up to 60 and 80. The reason that is a little bit lower this year is because we had to have that introductory level for a lot of patients coming on board, but these are recurring medications that is gonna go up. So the LTV still stands very strong over the course of 12 months, but the entry level, we had to bring them down. Our margin is about, in high teens, is gonna get to about 30%. Our business went public in December 2022 with the very tight structure of the 40 million outstanding shares at 63 cents. From the 40 million outstanding shares, about 26.5 million was in the hands of Victory Square Technology, which is a venture studio in Vancouver. Was a very tight structure. We didn't borrow any money. We didn't raise any money until earlier this year. We focused in growing the business and past the 22 million revenue. Earlier this year, we did a live offering at $1.55 with Beacon. The purpose of that was the business was cash flow positive, but we wanted to have a stronger cash in hand for acquisition and investment, get more coverage, diversify our investors. The business hasn't spent any money on the promo. Everything is organic. We closed that, it was oversubscribed over 5 million. We focused again, continuing growing the business. Then with the help of Canaccord and Beacon, we did another convertible that was oversubscribed to over 11 million about a month ago. The share has been trading over $4 and the business is growing really fast. Our focus is revenue and margin. That's our goal. That's our focus that we've been working on that. And been showing the growth. The VSTH1 is a brand new business that was launched in January, yet is getting to over 295,000 orders in one quarter. Q4 is going to be stronger than Q3 because a lot of these customers, they're going to go live. We had some really large order end of Q3 that went through basically the way that been recognized fall into the Q4, which again helps us to have a stronger Q4. We've been covered by Maxim in the US, by Beacon in Canada, and more coverage is coming out. We had focus on investment and acquisition that is going to bring revenue and margin. One of the ones that we did was Perfect RX, which is a 503A dispensary pharmacy, 50 state in US. That helps us to have a full control over distribution to the customers, and also is going to help us to improve our margin because there is a huge cost when you have a 503B and 503A that our next focus is either getting a compounding A or compounding B to make our ecosystem complete and have a full control over our offering. Now, before the Q&A, I'd like to invite Shane Madden, the founder and the CEO of the Hydreight, to more talk about the compliance, which is our moat, the future of the company, where we're going, and then we'll be more than happy to answer any questions.
Hey, everybody. So yeah, I'd like to maybe talk a little bit more and flesh out a little bit more as to why Hydreight is positioned where it is in the US healthcare system. So the vision for Hydreight way back in 2018, 2019 was to address three very specific areas that we had identified that the US healthcare system was going to go. Those areas are mobile health and wellness, which is essentially a mobile service being given by a healthcare professional in a remote setting. The second vertical was around the bricks and mortar, so bricks and mortar wellness facilities, med spas, lounges, of which there's about 190,000 in the US, and that grow on every month, every quarter. That would fall into that category. So your non-traditional doctor's office, but still providing healthcare. And the third vertical, or the third area of the industry that we had identified as direct-to-consumer self-administered medications. Now, that was 2019. Why we identified that was there's a $5 trillion spend in the US every single year, of which 90% of it is technically considered chronic care management. So your diabetes, basically healthcare, lifestyle choices, obesity, and downstream effects of those things. So technically preventable. Now, most people, if they were looking at any sort of metrics or any news, would have noticed that the US healthcare system has had problems for quite a while. There was a number of accelerators, of which, of course, nobody has any control over, which were COVID. After COVID, then there was the Ozempic, GLP-1 craze, which shone a light on this. But remember, we were formed in 2018, 2019 to do this. Now, Hydreight, and this is the parts I'd like to flesh out a little bit, just to showcase the opportunity where we have positioned ourselves as an ecosystem in the US healthcare system, and why we've created such a powerful moat. So we're a healthcare organization at our core that operates in 50 states. Just to give a visual, I know we have some wonderful slides here, but just to give a visual of how we're structured. So we're a 50-state medical company that has layered on top of that medical direction in all 50 states for all three verticals. A physician network that is different to the medical direction network to service the three verticals from a compliance medical perspective. A pharmacy network to supply and procure best-in-class products, vetted products, best price products that can service all 50 states across all three verticals, and obviously lab integration. And then on top of that, we have the three specific techs that are for those three areas that we've identified. Again, a $5 trillion market, of which 90% of it is technically preventable. Now, we did not want to be another runner in the space of either of those verticals. Our goal was to create an ecosystem where healthcare is done. with creating true moats. What I mean by that is compliance. In the United States, corporate practice of medicine is exactly how it sounds. It's the prohibition of corporations getting into medicine and creating revenues. So we wanted to create a one-stop shop, a modular ecosystem where in any of those three verticals we can solve all problems, one problem, or be a partner in some capacity. We get called the Shopify for healthcare. That's not from us, I can assure you that. We're more akin to Amazon Business or Amazon Reseller. We are the marketplace in this case. So just to go back again on the three verticals, our first vertical, which we launched in 2019, was a game changer. It was the first business to ever allow nurses to monetize their credentials. Up to that point, nurses could not work legally outside, well, work legally and earn money legally outside of a hospital or a bricks and mortar. We get called the Uber for nurses because of that fact. They're 1099 contractors of a 50-state medical company. That is the forward-facing, technology that you would see. Clients come to the Hydreight app, they select a healthcare professional for a specific service. The healthcare professional goes out to that remote setting, provides the service, and is able to monetize it. Game changer. We have over 3,000 nurses all paying us a subscription fee a year to join that, and we have since 2009. 2019 has been organically growing. We have some accelerators coming next year, which I'll touch on in a few minutes. So essentially, the second and third verticals around the bricks and mortar, again, have the same challenges when it comes to corporate practice of medicine. But those challenges in the bricks and mortar are more to do with operations. It's hard to keep a medical director on staff. It's hard to keep a physician network to service your clients and still be able to market, still be able to keep the lights on, the bricks and mortar costs. We're a perfect plug and play for whether you need tech, EMR, doctor network, pharmacy procurement, or all of the above. So again, we're a partner. On that vertical, we have over 1,000 locations across a number of clients. We focused primarily on franchises at the beginning because it was easiest for us from a business perspective. We were able to work with one company, with a corporate management that kind of everything was the same products, exact same rollout. So it was our focus to do that. We haven't had outbound sales essentially on any of the three verticals up to this point. So some of the numbers that Vahid went into, which is obviously shows great growth from 2019 to last year, where we did over 23 million top line, and some of the reports have us at 50 million top line. Some of the analyst reports that have come out recently from Maxim and Beacon have us at about 50 million for this year. Those all have come essentially from inbound traffic. So we've created this compliance moat. This year for us is essentially a show of execution. We knew that in Q4 of last year, when we released the third vertical, which is called VSDH1, this was going to be the coming out party of sorts for the Hydreight Technologies platform. This was the third vertical of the original vision that was going to be released. We had tremendous attraction right away with 400 plus licenses. A couple of things to note on that third vertical: these businesses that we are solving a myriad of problems for, either one huge problem, which is literally it's illegal what they're doing, or operations, or a combination of both of those. They all have scripts, they all have business. This was merely a migration process. So we've created a moat which is based around legality and compliance. We've created an infrastructure where we're the only company that I know of that is watching all three boards: nursing, medical, and pharmaceutical in all 50 states. We're the first movers when it comes to creating an ecosystem. We don't want to be another runner. We didn't want to use our third vertical to just be in the space as Hims and Hers and Roman and Henry Meds. Why not have 10,000 mini Hims and Hers? By leveraging our infrastructure, and that's what we did. So for me, 2025 and the Q2 realization of those migrations, Q3, which is coming out, we have a little update coming out tomorrow, but Q3's order numbers were north of 290,000 orders, which again was ahead of our projections. This is the realization of the third vertical, the execution from the team to migrate those clients, and obviously carry that on into 2026. So again, I just wanted to flesh out some of the things that we've created from a moat perspective, why Hydreight exists, why there's excitement in the medical industry about us, and turn it over for any questions that you guys have. You can make some up if you want. Yeah. Thank you.
Just on the VSA-1 side of things, I'm curious if you've experienced any sort of challenges with the onboarding process. Obviously, you're going to put this. I'm curious what the experience there has been, and what sort of visibility do you have into pipeline, what sort of people running out of 2016?
Yeah. So complexity is always there. It's an operational challenge. We're moving businesses who are already doing services, whether that's multiple services, whether that's TRT and GLP-1 and peptides and ED and hair loss, or whether they're doing one or two. Then are they doing it in multiple states? There's multiple dosages to some of these services as well, like a GLP-1, for example. If it's semaglutide, tirzepatide, there's 6 different levels. So a strategy to move them along per dose or per group was the thing. So there was a lot of planning. Obviously, we didn't want to fall on our face and have this wonderful moat, this wonderful ecosystem, and then have a problem where you're losing these people, their patients, as you migrate. So we were very, very careful with that, and we've executed on that. So that would be probably the biggest challenge, is the migration. Obviously, we've been in the background creating sales and marketing outbound division as well. As I said earlier, all of this, 100% of this was inbound, just because of the moat that we've created. So now it's time to basically throw fuel on the fire. By the end of this year, we will have migrated, for the most part, the previous clients. Obviously, clients are continued to come on each quarter, and then obviously, because of the recurring nature of these treatments, our third vertical, we offer over 43 treatments. So we are not bound to the success of one product or the success of one categories of products. We have everything that is in the realm of patient-specific self-administered. So that includes at-home testing. Right? Individualized healthcare is where all of this is going. So that's what we've created, and that's what we've been pushing. So what does individualized healthcare mean? It means getting true data about yourself. So from an at-home test, the next step then is the recommendations that come from that via the physician. The next step is medication for that, and then all of these treatments, for the most part, are continuous. Monthly. So the scalable nature, and then when you kind of combine the treatments that are on this third vertical with the fact that we're B2B, we're not outlaying $600, $700 for customer acquisition. We're working with these businesses, solving real world problems from a compliance perspective, operational perspective. We're just marrying the two here. We're giving you a widget for your tech, and then we're solving all of your problems in the back end from a compliance liability, and then we're getting you the best in class pharmaceuticals, and then obviously moving from there. So one of the things I just wanted to touch on as well is that's where the company is now. It's kind of realized the 3 verticals as of Q4 of last year. I feel with the growth in orders, everyone has seen that there's been an execution level there, which we're very excited about. The next step for the company, obviously, we've raised. We're sitting on about 17 million of cash. That was completely for vertical integration, acquisitions, mergers. So we're looking heavily at protecting our supply chain. One of the things that we're going to run into here very quickly, because we know the scripts that are coming because of the clients that we're migrating, is the protection of our pharmaceutical supply. So we're looking at vertical integration from the pharmacy perspective, and protecting that supply chain. Yeah.
Clients are like all 50 states versus 10.
Yeah, it's a mixture, and actually, it's one of the moats. There's a handful of people that structured themselves reasonably well for a state or 2 states or a product, but did not have the wherewithal to be able to expand, because again, this is incredibly complex. The same service in bordering states can be treated very differently from a medical perspective. Some of it can be synchronous every single time. Some of it can be a script for a year. Some of it can be what's called asynchronous, which is basically an online. So I would say that there is some very heavy hitters that are 50 states that came on that have large customer followings, and they wanted to expand. But it is a mixture of all of those. Clients expanding into other states, keeping them compliant, expanding them into other product lines that they would have not have been able to offer otherwise. That's obviously a huge moat for most people. Okay, I think we had 1 minute left. I got the sign, so if there's any other questions.
How do you get customers?
Right now, it's all inbound. So obviously, we've been in the space since 2019. So when we have a physician network, a medical direction network, bricks and mortar, nurses, there's a lot of referrals, etc. So it has all been inbound. When your compliance is your moat, it's easy to be introduced to people, I can assure you that. One thing to final, because it's very important, a lot of these businesses opened up during relaxed laws during COVID. And their options are very, very simple when these came back. Either you try to get compliant, which is going to cost you years of figuring it out, obviously, and then essentially you're a one-man band, or you join with someone who's already figured it out and join an ecosystem. Awesome. Okay, I think we're out of time. Thank you, guys.